Hey, what's up, trader? It's Khati, founder of DesireToTRADE. So today's video is really going to be about technical analysis and something that when you trade, you could make a mistake with. And it's something that I lost a lot of trade with, and it's about stop loss. So it's a crucial mistake that if you're doing it, especially in day trading, but it works also for swing trading, you're going to have a lot of bad trade. So we'll look at exactly what it consists of. So the way I'm going to do this is I'm just going to assume that you're trading according to my course, The Ultimate Day Trader, on a small time frame. So let's say on a 5-minute chart. Now, what a lot of traders are going to do is they're going to look for bounces of moving averages on a 5-minute chart. So a good example could be here. So you have this engulfing candle with a bounce of the moving average, right? Trend is up, bounce of the moving average, you're going up. So a lot of people are going to buy right here at the close of the candle or just above the high. Okay, this is good, but they're going to place their stop loss right below the low, so just below the low. And this can be really a problem when you day trade. And the reason is this: oftentimes it's really rare that price is going to go straight up right away, okay, and hit you take profit. Price may do that sometimes, but most of the time it's going to go a little bit above, come back, retrace a little bit, pull back a little bit, and then go back in the right direction. Or it's just going to do the opposite and hit your stop loss, but that's fine. But the point is that when you place your stop loss close to the low like this, price might come back and might hit your stop loss. And here, I'm pretty sure the stop loss was hit. Now you don't see it on the graph because the graph shows it higher, right? But here's the thing. Whenever you trade, you're going to have a spread. And the difference between the low here of the candlestick, where you place your stop loss, and the place where the price came back, okay, so right here, when price came back, the distance between the two is 1.4 pips. So 1.4 pips, I know traders who have a spread lower than that. So if you're going to come back to that point, and the 1.4, and the spread is bigger than 1.4 pips, your stop loss is going to get hit. It's how it works. So if you place your stop loss right below the low, in that case, the stop loss would have been hit. Now, this is why it's crucial for you if you're going to day trade, especially on the low time frame, the 5-minute chart, to put your stop loss not below the low, but to give it some room, give it some space. So if you're going to take that trade, as we said, you're going to buy above the candlestick here, you might want to put it below right there or something like that, because then you're sure that price is not going to come back to hit your stop loss. But this is so crucial because so many times that I put my stop loss too close, maybe like this, and price will just come back here, retest, and then go back up. But my stop loss gets hit. So you want to be really careful with that. You want to really consider this thing really seriously. And the same thing is going to apply when you want to swing trade. So I have no idea what price is doing here, but I'm just going to go on the higher time frame. See if we can find something. Okay, so this might be a good example right there. So if ever you were to decide to sell here, okay, at that point, let's say you want to sell here, you will put your stop loss usually just above the high, right? This is what most traders do. But the point is that at this point, you're not necessarily wrong because you want to make sure that you make a higher high to be wrong. Now, when price comes here, hit your stop loss, you're not wrong because price came back there and then sellers took the control right away. Okay, so you're not wrong necessarily. So that's what's crucial for you to put some room, to leave some room to your stop loss. If you're going to take the trade here, put your stop loss here if you want. It doesn't matter. Because even if you have a lower reward to risk, okay, even if you take a little bit more risk, most of the time, you're not going to hit your stop loss. And you're going to be right more than you're wrong. Okay, so this is crucial. But don't put it too crazy like here. Okay, this will just not make sense. But really think about when you would be wrong. And at this point, you're not wrong. At this point, yeah, you're kind of wrong because you're making a new high. But if you just go a little bit above and then price coming back right away, you're not necessarily wrong. So you want to always think about putting your stop loss where you're going to be wrong. Not where you want to cut your losses, but where you're going to be wrong. Because then you're going to adjust your position size according to how big is your stop loss. If you have a huge stop loss like, well, this is not huge, but you can have a big stop loss, then you're just going to take less units. You're gonna buy or sell less units, and that's how it works. But really think about where you put your stop loss and be strategic when you put it. So this is a quick video for this Tuesday. Hope you guys liked it. If so, like the video on YouTube. Check out DesireToTRADE.com. Check out the podcast release Monday. And there's an online trading summit coming on Thursday. So check this out. I'll be hosting this live event for all my people, all my audience. They're going to be free. And I'm going to really give my best advice and best stuff. So check this out. Let me know if you're interested. I'll put the link probably below or above if you're on Facebook. And I'll see you soon. Ciao.